Welcome, you trader nerds, to the greatest trading community on the planet, the Trader Nerds family. And if anyone's not a member of Trader Nerds, just click the link below on YouTube and get a free 3-day trial. We'd love to have you in our little group. We would. So the market down 1.11%. Wham, cry me a flipping river. Ladies and gentlemen, today's going to be a very, very, very important session. But I digress. Let's look at our big green monster, see if anything looks does anything look strange? That price is crowding around the 50% mark. That looks unusual. No, it doesn't look unusual because we called the top, we called the bottom, we called the middle, and we are right at the middle. This is what we call a nothing burger. Nothing to see here, ladies and gentlemen. All right, so market's down a bit. Wham, cry me a river. All right, so let's go see how our little count's doing over here. Let's see. Let me hide it where y'all can't see the count numbers and I'll get in big trouble. They'll gripe at me. And I'm expecting to see big down days today, and I'm going to tell you why I don't even give a flip. All right, so we are at 35,042. 35,042. You need to hang around for the Muscadine Mafia, because I am going into some deep detail on some stuff, which is really, really good. Okay, so 316, today's 317. So we said we're 35,042. No Jeffersons today, but I don't really care. 35,002, so we're down 7%. Wayne, cry me a river. All right, let's go to our little thing and see how we're looking. How's Daddy doing? Because I ain't even been looking at the market today, because I've been busy feeding my pigs. Then we went to work out. Then we went and had Chinese. Hey, will someone go get my drink that I left out in the car? It is raining cats and dogs in Georgia. All right, so my deltas are 88. My theta is 79. Now I got some stuff to show y'all. 88, 79, 88, and 79. Okay. And VIX was at 25. I saw it a while ago. So VIX went up a little bit. Buying pair usage is at 11,456. I almost called Scott Sheraton today while he was on with Tom and Tony and said, yo, man, how come we can't get this thing to update like it should? So let's see, cap requirement 15,002. Man, 15,002. Now, y'all, I'm about to show you something. All right, so we're at 42%. We're at 88 on the deltas, and we're at 0.23 here. Now, I know what you're thinking, Bobby. You're too high on your deltas, and you're too high on your buying power, and your theta is a little, it's not as high as we could let it go, but it's okay. And I don't think I'm going to do a single stinking thing today, because I have been meditating. I have a notebook somewhere. Look here. I've had a notebook and I've been writing. I've been what we call in the South, I've been pondering. See all this stuff I've been pondering? I've been writing, pondering on stuff and writing out thoughts. And I think I've come to a couple of conclusions, which are really, really good. Hey, will someone go out in the car and get my drink, Beth, or did I bring it in? Hello? Well, you're not Beth. Will you go out in the car and get my drink if it quit raining? My little Diet Coke's in the middle of the seat. Because I sure am thirsty. Or will you get Mama to make Daddy a root beer with extra ice? She never puts enough ice in the drink. Okay, so I wanted to show y'all where we were yesterday. This is important. We're going to go a deep dive study, but right now I just want to touch on it. This was our risk profile yesterday, ladies and gentlemen. Everybody remember this? This is where we were yesterday in this account. We had a 54% probability of profit. We were looking terrible if we continued going up. Of course, we didn't go up. We went down 1%. And we had a 1.5 standard deviation cushion to the downside. After we got off the air yesterday, Sweet Bobby went into the laboratory, or as we say it in Alabama, the laboratory. And I did some ciphering and I did some stuff. Now I want y'all to watch this. 54% probability of profit, losses to the upside, good to the downside to a 1.5 standard deviation move. And I want you to show you what I turned that into. Of course, who knows what it looks like now, but here's what I turned it into. I turned it into a 97% probability of profit. I turned it into no risk to the upside. And I turned it into almost a 2 standard deviation profit zone to the upside. And I increased my upside potential here. That is what stuck with me yesterday. I said, sweet Bobby, this is the way. And I came away with a lot of conclusions. And we'll go into a deep dive again in the muscat market. But for now, I'm just going to tell you that, I'm okay. 42%. I'm good. Nothing to see here. So let's go to the next account. Next account will be the Crimson account. How did I get from 6 to 88 deltas? Just today's down move. Yeah, and what I did, Glenn, is I took off all my futures. I took off all my short futures. Now, in hindsight, that might not have been a smart thing to do, but there's some logic behind my reasoning. Because as I was sitting there, I'm listening to a book, The Man Who Solved the Market, or something like that, about that Jim Simons guy. You know who I'm talking about? It's just kind of interesting. And I was thinking there, and then I pause it, and I go, what would Jim Simons do in this mathematical scenario? And I would, it's been weird. My mind's in a weird little place lately. So here's my Sweet Bobby spreadsheet. Look, y'all, I've already pretended and updated it today. And I pretended that, I pretended that today was Monday, and I took my deltas from 7.6 to 176. And my buying power went up to 49%. And y'all are probably saying, Bobby, oh my gosh, you fooled you. What are you doing with 176 deltas when your maximum should only be 50 or 67? I know. And this is another account that I took my futures off. And it came back to me that I remembered something about futures. Now, futures and I have a love-hate relationship. And let me just say it in this form. And it was so cool during our mentorship today. Karen and Ryan both came to the same conclusions on the exact same day that Sweet Bobby did, without us even talking about it. Yeah. And Karen closed hers too, and Ryan closed his too, and we didn't even talk. And I'm like, that is wicked, John. When my mentorees are starting to think like the mentor, it's kind of freaky. Now, we may have all done the dumb thing. We don't know, but I think it was good. I took my futures off because I got to thinking. And thinking in probabilities and thinking in math. And I said, I remember you, future. I remember this. I remember not too long ago when old Bobby was an active futures trader. And I remember this from somewhere. I remember this. And what did I remember that this looks like? Anybody know what this looks like? I told Ed what it looks like. We might have talked about this yesterday. Does anybody know what this looks like? Evan knows what it looks like. Y'all know what it looks like? It's like a bunch of darn calls to me. That's what it looked like. And I said, well, screw that. And so I just went in the lab and I did a little playing mysteries. That's all I did. I just took my futures off. No big deal. If you want to keep your futures on, keep them on. But I reminded myself one thing. Futures are a short-term band-aid. They are not a long-term solution. That's what I remember. And the good thing is that the short futures that I left on last night, they were up $200-something when I closed them today. Had I left them on, they would be up another couple hundred probably. And fortunately, I have been about neutral on my profit and loss from my futures. It's not like I lost on my futures. I think this morning I was down a couple $100 year to date on my futures positions, not my futures options, but my futures positions. So it's not like they've worked against me, but I remember them. I remember them. And oh, Bobby, I'm kind of slow, y'all. I'm getting old, a little slow. And I remember they're short-term fixes. They're not long-term fixes. So let's see how this one looks today. It's going to be ugly, but I don't care. So I'm at 35,511 today. So let's see how that looks. 35,511. 35,511. Well, that ain't right. 35. It couldn't have been 35. Crimson is okay, 32,511. Sorry, I started to say that was too much. 32,511. So I expect it to be down 32,511. I took those down, right? So 32,511. I'll pretend that was where I am right now as well. 32,511. When I did it this morning, I was at 33,357. Should I have left the futures on? You would initially say yes, but I took them all, took off my short futures because I remember they're short-term fixes. Now let's go into our Greeks and ratios. And our Greeks and ratios are monitor. And I think a lot of you are having this same epiphany that I am. So my deltas are 201, my theta is 83. 201 and 83. 201, 83. So it got worse, right? 201, my theta increased. So that means the market moved against my position. So I'm at 0.26. Okay. This is now at 25. Oh, sorry, I'm at the wrong thing. 201, 201, and 83. I'm projecting to Monday, y'all. That's what this line is. And we're at 25. And my buying power was 16,673. Now my buying power is 19,100. Oh, this is so good. I love this. Y'all got to see this. 19,100. Okay, now, so this line is the one we're looking at here. All right, so we are 152, two positive deltas. We are 0.26 in my theta, and we're using 58% buying power. Okay. All right. Okay. All right. Now, what we need to do is go and look at where the analyze tab in the account, and let's look at what it looks like where the risk management team, how they look at risk. So what they do is they go here and they go and hide simulations. I think I got all my stuff here. I've got all my stuff. Hide simulations. I've got all my T-bills off. Let's see what our price slices look like. And where they go to is the 12% down. So pretend that we went 12% down from where we are at now. And this is where the risk management team at TOSS is looking and stressing my portfolio. And they're saying to themselves, you fat black glass wearing son of a gun. Oh, let me type this in. What's my password? All right, so they're sitting there going, you fat black son of a gun. If we get a 12% pullback, you're going to be $18,000 down. Okay. Is 18,000. Now, I know what you're saying. The buying power effect will have gone up, blah, 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 blah. But I got to make sure that the P&L on the day is not greater than my net lick on 12% down move. And it's not. So I could withstand. I'd probably have to sell futures at that point. Futures should be a last ditch emergency effort. It shouldn't be something that we hold long term. I'm pretty convinced of that. And I will leave you guys to we'll challenge each other in the Muscadine Mafia. That's where we'll hash it out. We'll fuss it out. We'll hammer it out. But for now, everybody on YouTube and in the room, I just want you to say that 12% down, what's my risk? And I would be down $18,000. Do I have $18,000 to be down? Well, sure I do. Right, sure I do. So I took off those futures. This is 4 expirations. This is the 17th. Happy St. Patty's Day to you. Yes, I'm wearing the exact same shirt that I wore yesterday. Yes, I did not wash it. Yes, I did work out into it 2 straight days, but I did change my underwear, which I thought was, really, really good. So it is the same shirt I wore yesterday. All right. So questions on this. So I'm really think I'm fine. Think I'm good here. Think I am good. All right. Now, let's go to the final account. And we'll go to the Bobby Beth 203 account. And let's see what this one looks like. Now, this one's much better, right? This is an $80,000 account, maybe in the 79s now. If we went down 12%, I'd be down 25,000. on this little thing without taking in volatility, but this is kind of where they're looking, right, to see what we would be. And I think I'd be just, I'd be fine. Now, buying power will explode, probably have to sell a future or two, blah, 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 blah. But my risk is fine. Oh, let's go back to the Crimson account. Okay, because I want to make sure I give y'all as much stuff as I can without us fuss. Oh, I love it, baby. Oh, look at the little bear. And he cute. He graduated. Mwah. All right. So let's look at my naked positions. This is what is cool, right? I started saying to myself, wait a minute, Bob, you son of a gun. Where are your, see, I got rid of my futures hedge, right? I made $292 on the day on it, no big deal. But I started going, let's look at my naked puts and let's just see where my nakeds are. Now, the cool thing is Ryan showed us how to put on options delta, and it takes it a little while to load, but these are my naked puts, and I've got them. You can use this little thing, click here, and it will line them up, y'all, based on the worst delta that you got. So my plan calls for me to roll them when the strike is breached. Well, y'all, I don't have any strikes that are breached. Now, Ryan, in his plan, has it that if something gets to a 30 delta, he can roll out. Okay, that's fine. Ed, he doesn't even know what delta he rolls them out at. He just rolls them out if his buying power and his metrics get out of line. So he just rolls them out to extend duration. But I don't even have anything at a 30 delta. Even on a big 1% move down today, including all the big moves down that we've got in the last week or two, I'm still at a 27 delta. And look at all my naked, y'all. There is nothing that is even close to being punctured. Nothing. And it gave me pause to say, Bobby, what do I really care about? If my delta is a little high or my buying power is a bit high, why not even care? Because my individual positions are perfectly safe. Now, you know, I always look at the forest first and then the trees. These are the trees. We've looked at the forest. Okay, buying power is a little high. Okay, deltas are a little heavy. I got it. But at the same time, my individual trees are perfectly fine. This is where the profits are coming from. I just don't see a big deal. Now, could I take some risk off? Yeah, I could. Could I go here and say, well, you know, is anything profitable? Is anything not profitable? Is anything, you know, it doesn't look like I have anything that's profitable here. But then I started even thinking with that, does it matter if it's profitable or not? If I wanted to take risk off, I certainly could, right? This would release 15 deltas, it released 10 theta, you know, and that's what I did in the other account yesterday to get me from a probability of profit of 54% to now a probability of profit of 97%. I just closed some positions, and as Ed so eloquently stated yesterday, I sort of say elegantly, and Ed is an elegant man, but he used the word delever. Okay, well, do I want to delever? Well, I could, but then I started saying, you know what, that little theta number is probably the primary concern, and it's fine. You know, I don't want to get higher. This is elevated. Yep. I could sell futures. Yep. But that's a emergency case only thing for me. And I think I'm fine with 51% buying power because it went back. The muscle memory went back. And I go, Bobby, you were at 96% buying power just last year. Didn't bother you at all. And I'm like, why am I getting bothered when we're at 35.99% buying power? So I think my logic is sound. Cool thing is I don't have to make a single change to my trading plan. Not a change at all because it's still in there as optional hedging. It's optional stuff I can do. I can optionally sell futures if I like. But what I forgot was my risk tolerance. I think my risk tolerance is just fine. Yeah, that's what that skinny black glass wearing SOB said. By the way, I found my spam hat, and I was going to wear it out to dinner the other day when we were going to Applebee's. And Beth said, "You are not wearing that." And I know she hid it from me. I know she hid it, but I have found it. All right, so let's go to the other account and see how we're doing over there. Your glasses are not black. I'm not even sure mine black anymore. No, these are like, I don't know. They're kind of blackish blue or whatever. They're dirty. It's all things. They almost got crust on them. All right, so let's go to the other account. And this will be the Bobby Beth 203 account. And let's see how we're doing here. So I don't think I'm so concerned about some of these ugly moves, y'all. I just don't think I am. Now, 2 months from now, when I blow my account out, y'all can be like, Bobby, I tried to tell you, man. 79,997. Y'all, I'm gonna call that 80. It just sounds better. 79,997. Bobby 79,997. Let's go over here. 79,997. I'll call it 79,997. It'll be better when it goes back up. All right, so that looks kind of bad. We're down 3.7%. We ain't crying a river. Let's go look at our metrics and see if y'all could handle it. Our metrics are 191 and 166. 191, 190, 191, 166. 191, 166. 191, 166. Okay, so that's 0.21 in my theta. We're at 25 divs. And buying power swelled up to 33,395. 33,395. So our deltas are 191. Okay. We're 21.21 on theta. Okay, we could be a max of 0.30. Says we need 71 short deltas. Did I get rid of all my futures in this account? I'm not sure. I think I did. And we're at buying power usage of 41%. Okay. So I don't know. My new reaction is, while I have been adjusting with selling futures on this, I just don't think I need to. Let's see if we got any futures positions. Let's see. Put debit spread, futures hedge. I think I closed them. Yeah, I closed those. Unallocated. Make sure there's nothing unallocated. Yeah, that's all the stuff that I closed yesterday or did yesterday. Naked puts. Let's do the same thing. Let's look at our option. Yeah. Okay, I got a 26 delta, 26, 23, 23, 22, 20, 19, 14, 13, 12, 9, 8. Okay. I mean, to me, this is what I kind of got away from, is kind of monitoring some of my trees to say, does a tree need pruning? Does something need rolling out? And right now, I just don't see it. Now, you could say reduce risk if something were profitable. I don't have anything profitable. They're all down. But this is the income producers are perfectly safe. Let's go back over to the Analyze tab, to a 4 expiration. Now, the problem is I have 5 expirations, right? We were trying to figure out how we could figure out what the extrinsic value is. Well, I've got 5 expirations, and this only shows 4. But you see how right now P&L day, it says I'm down 15.25, but if we hang right here through April the 12th, we're at 21.20, we're at 2,200 there, 2,300 there, 22 there, and it starts going down, 5% down from here, and we're up only $816. But again, it fails to take into account the last expiration. And that should come off because I think I've got some 1-day options coming off on these put debits, but I thought I had some 1-day. Maybe I don't in this account. I guess not. Maybe that's the other account. So my new thought process, no change in plan. It's just the way that I'm viewing risk. The way that I'm viewing risk is just not overly concerned. Now, I wish Ed would show his thing that he showed me yesterday. You might remember that Ed yesterday, in his snotty little snooty way that Ed brags about stuff, was like, yeah, I didn't hedge through the whole thing. Yeah, I didn't sell any future. I'm Ed. I'm notional Ed. I don't care. Blah, 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 blah. And so Ed didn't sell a future at all. He was just, hoity-toity and just, he eats at Longhorn. He didn't eat at Applebee's. So he's a little hotty-toddy. He thinks he's the stuff. He didn't hedge it at all. What he did do, I think, is roll a couple of his positions out when his risk got too much. But I noticed one thing, Ed, I wish you could share that, but he won't share it because he don't want to brag that he's got $1 million in his account. He thinks y'all think he's all, hot to trot if he shares all of his million. You could burn Baton Rouge, Louisiana on a wet day with Ed's money. That's how much money Ed's got.
So Bobby,
Yes,
you're killing me. Do you want to look at my spreadsheet?
Yeah.
The LTs in it?
Yeah.
Is that what you want to look at? All right, so first,
are you gonna hide your thing? Are you worried that somebody's saying how much money you got?
Well, if I can click the right button, I'm going to hide it. So let me have to log back in.
Don't be
on the
modest,
computer.
Ed. We know you got it. You ain't fooling nobody.
Well, the people in the T-bill session, I accidentally splattered what I had there, so it's not exactly
Ed, you did it on purpose. You know you did. Just to, you're fine. It ain't no big deal. Let me fix it where you can share, because I do want Ed to show. When I looked at Ed's yesterday, y'all, and I can't believe I got on the phone with Ed. I was like, what am I thinking? And then I called him twice. I'm like, am I a glutton for punishment? Calling Ed as many times as I do a day. But then when I looked at Ed's, I noticed one thing about Ed. You know what he did? He managed one metric. You know what metric he managed? Theta. That's all you managed, Ed.
Hey, Bobby.
Yeah.
Can you put your spreadsheet back up for this account while Ed's doing that?
Yeah, gladly. Let's see. All right, right here.
Because I guess my question is on trying to track what is your true risk. If you're saying you're fine being very long delta and higher on your buying power, and that's not risk, then what are you looking for on here that says, oh my goodness, I've exceeded my risk tolerance?
I think, and y'all, it didn't concern me before last year when we were at 96%. So now I'm like, why are we concerned when it's 50%? I think this is what I'm looking at right here.
So if you get outsized on your theta, if it jumps up to, I don't know, 0.5%.
I got too much. Then I got to start pruning. Right? But right now, and here's what Ed told me yesterday, and you'll see when you kind of see his spreadsheet. Ed's like, Bobby, I don't know, man. I'm kind of at that max, and Ed's a little more conservative than some of us are. His theta max for him and his comfort level in his account is about 0.2. And I'm at 0.21. So it's not like I would say that I'm oversized risk. And this goes back to what Trey was talking about yesterday, is that, wait a minute, theta is a measure of risk. And I think Trey watched one of the videos and kind of goes, oh yeah, okay, I kind of see how that works. But you see it more when it's in play. So now I'm like, yeah, our job is to keep little Frogger from getting hurt here and from getting hurt here. Well, what is getting hurt here? Well, is 41% really going to hurt me? The reason I'm trying to stay at 35% is so I don't go over 100%, so I don't get a margin call. But is 41% really that, bad? And really, is delta risk that bad when the deltas of my risk positions, because who cares what the deltas are on my put debit spreads? Who cares? We want those to be in the money. So the only risk that I truly have are on those trees that are the naked puts. And if my naked puts are at a 26 delta at worst case, why do I even care about the entire deltas in the account? Not saying that I could pare some stuff down. I could close a couple positions to take a little risk off. I could, but do I really need to? And when I looked at it yesterday, and again, I've been pondering. So, we can have this discussion, but I think my pondering led me to go, wait a minute. The ultimate metric of my 3 that I still want to track is going to be my theta. Don't let it get out of control. Keep 0.1. If you're very conservative, you would trim off positions today. You would say, I'm going to get this thing down to 0.1. But I think right now at 0.2, I think I'm fine. And what was I in the other account? Let's see over here. Let's go to the Tasty account. We're at 0.23, which is very similar. And then in the little account over here, I'm at 0.26. I just think that I'm okay. Now, if I start getting above what I consider to be my max theta here, 0.3, yeah, I may prune a tree out of the forest. But right now, I don't think I have to. So the plan doesn't change at all. Plan is this: metrics, try to keep your metrics in line, try to keep Frogger safe. But what is safe Frogger? Safe Frogger is max of 0.30. You're 0.26, you're fine. Who cares about these deltas when my individual position deltas are just, naked put? God, they moved down, didn't they? Yeah, now it was at 0.26, now it's at 0.21. Apparently the market's going in our, no, I didn't, I gotta sort them again. Hold on a second. Yeah, 0.26. 0.26 is the worst. Now, here's what you need to do, guys. You need to say, what does my plan say as far as rolling the risk position? Where it's too close for comfort? Mine says when it's approaching a breach. So that would be at 0.5. I'm at 0.26. Ryan's plan says at 0.3. And then you got to say, okay, is it a permission to roll or is it a rule that I must roll? You got to know what your plan says. My plan says that I can roll it, or I can close it and take the risk, or if my overall portfolio metrics are fine, I don't have to do anything. So let's say that this one was at 0.5 delta, and my overall metrics were at 0.21 theta. I don't have to do anything. I could close it, or I could roll it, or I could whatever. So it gives you a great deal of flexibility. Ed, you got your little thing ready to go now? You got everything hid?
Yeah, hey. You want to hang on. I hear an echo. Does anyone else?
I see you in Zoom twice, it looks like, at least on my screen.
Oh my God, that's all we need, 2 of them.
I'm cloning myself.
Man, you got an echo. Ed.
I got rid of it. Okay, we should be good now. All right, you want to give me the share power?
Yeah, you go ahead, Ed. Share away. I got you permission. You got permission to go.
It's been a while. Got to find the buttons.
That's what she said.
Okay. So this is my LT112 account. So this started on February 8th. I put 50 in this account. I plan on putting 3 LT112s into this account, which requires putting 1 position in per month.
Yeah, can you make it bigger?
Yeah.
Maybe it's just me. I'm just old and decrepit. I can't.
No, I was trying to fit as much of that on as possible, but that's
Okay.
fine. And I'll scroll down as I explain this. So
Okay.
I started with 50, and then I put the position on. Frankly, I don't know where. I didn't enter my metrics those first few days. I don't know. You know me in spreadsheets. I kind of hit the fumble button every now and then.
Yes.
So on the 15th, I started doing good daily stuff, and the wiggle you see up here was very likely me being in that position and it going against me and coming back and yada yada. And very stable net lick through this whole February period where, there was some pullback. In other words, I had 1.1121, and you can see my metrics went from something below 0.06. They crept up to 0.08. That's simply the market pulling back right here. I didn't do anything. It's just volatility expanding, market pulling back. Time goes by. You can see my metrics really don't hit 0.1, but all right. This is a campaign. It takes time to get there. I'm in no rush. I want to crank this thing up so it's cranking 2 or 3 months in the future at that point. So here comes March 8th, which is my 1-month anniversary. And on March 7th.
Oh, happy anniversary, Ed.
Thank you. It was the anniversary of my first LT in this account. So it was a very, very sentimental moment. So on March 7th, I did my T-bill session and I actually did an LT, my second LT a day early because the market was down 1.5% and I wasn't going to miss that opportunity. So, and at the same time, if you notice my net wick went from, see, it's creeping higher, 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 right up until here, right when so right here, I put 16,000 in the account. I'll just show you real quick. I added 15,000, which is a transfer from my Tasty account into this one because I realized this 50 grand was not enough for me to run 3 LT112s if we got into turbulence. Now we hadn't hit the turbulence yet. We kind of were hitting it initially on the 7th. So anyway, so this jumped here because I put 16 grand in here. So I actually dropped about 1,000 that day. It's 51.1. If you had 15, that would be it. No, it's unchanged. Okay, my bad. And then the 8th, if I recall, was kind of an up day. And then here on the I don't know what happened on I don't know what happened in here. I missed a day. The market started blowing up. So you can see now I had 2 LTs on. You can see at first the LT was here. So my buying power usage went from 84 to 68. That right there is the jump in buying power for putting the second position on. The rest, and so some of these metrics are also like my deltas popped, but they went from 13 to 61 because I put the position on, not because the market had yet pulled against me, except the market was down 1.5% that day. So that pushed up my theta a little, it pushed up my deltas a little, yada, yada. And then the torrent of volume getting, or whatever you call it, the
Armageddon.
hit. And this is what happened with me doing nothing. Now, I am not bragging. I am not overly confident. I am.
Ed, just go ahead. Just do it. Just
I'm
take
traveling
a victory
cautiously
dance.
down the path of my journey. So, okay. So what I'm saying is my metrics start blowing up. Boom, 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 boom. Look how high the theta gets. Oh, and right here on this day, this is where my metrics were on the 15th. What's that? 2 days ago?
Yeah.
This is my metrics in the morning. Intraday, we crash after that. My net wick went down to like just over 60,000. My buying power popped to like 52%. And I had not done anything yet. And in my plan of action, as Bobby mentioned earlier, I don't have a set delta. I'm not faulting that. There may be an optimal delta where I should always roll. But I'm looking at these positions. I know I have 2 LT112s on. I know what that is. I look at my profit tents and see where my protection comes in and how long before it gets strong. And pretty much when my buying power popped to 52% right here, I'm like, all right, if we move down 1 more percent, I'm going to roll my challenge naked puts in one of the LTs out a couple of weeks and down in price. I'm not going to take in a credit. I just want to move the position out of the way. So I would basically do a 0 credit roll from, let's see what those strikes were if you want to.
Yeah. And you're trading ES in this account. So it's he's got less positions, y'all, but they're much larger, right? He's got, ES positions. Okay, good. So he doesn't have a lot of trades, so it's easy for us to look at and to evaluate. Okay, yeah, go ahead.
So I put this one on. It was done on February 8th. It has a May expiration. I don't know. This is how I label mine. And then I did my second one on the 7th. And so these, because this had a whole month of decay, this position was almost, I take these off at 90%, and these were at like 85% the day I took it off. In fact, I may have even commented in the T-bill section, I could take this off, but I'm going to run this pure. I'm just going to leave it. I'm not at my 90% yet. I'm going to let it go. Okay, so we all make mistakes. That was a good objective decision, but it was wrong because the market collapsed right then and there. So I could have bailed on my nakeds, had an extra put debit spread on, and won 112 and a put debit spread, which would have been very protective. Instead, I basically gave up all the profit in this. I got about a $910 profit on the whole thing, trying to get to 1,000. And I've taken in a net 1,100 and something on this whole structure. Well, here you go. 1621 minus 501. So that's 1,117-ish dollars that I took in. I was trying to get out of it around 1,000, which is about 90%. Okay. I was not quite there. So here comes this other. So, you know, in a pullback, what's going to hurt me more? These 1225s or these 3225 or 3275? Well, these are going to hurt me more because they're higher. These are going to hurt me more because they're further out in expiration, and these have already had a month of time to decay. So my plan would be to roll out the most threatened two nakeds, which implicitly would be these because they were the freshest. So,
But wait a minute, your spreadsheet does not show that you closed the 3225, but you had closed, you did close it though,
I
right?
did not close it.
Oh, you did not?
No, I
Okay.
did not hit 90% on the nakeds, and I
Okay.
did not. I was at like 85%. You can do the math. 910 divided by 1,000. I wasn't. I had to hit 1,000, so it's 910 out of 1,100 and whatever I said that difference was. 1117.
Mhm.
I don't know. I can't count it. It's below 90%. So they didn't come off, and that's fine. So now let's go look. Any questions on this so far?
No, I don't.
Okay, so I don't have a trigger point, but when this goes above 50, my collar starts to get tight, and I know something needs to happen pretty soon. When my theta goes above 0.2, it is a warning sign. It's also usually accompanied by red elsewhere because these deltas go red.
Mhm, mhm.
This isn't going to go red until what, Bobby? 0.3? Is that where you have it?
Yeah,
Red?
0.3.
Yeah.
There it would have been 0.4 because VIX is at 30. But the last 2 days, if it goes above 0.3, it's going to go red. Yeah.
Okay. So let me
So
go
what
share.
did you do anything between the
I
15th
did
and the
not,
17th?
because fortunately the market recovered on this day.
Yeah.
And my metrics fell back under, and then look, the next day my number was 44. So like I'm not feeling great,
Mhm.
but I wasn't feeling like it was the end of the world. And then yesterday we had a nice big pop, and look, my number got green again.
Mhm.
Yay.
Mhm.
And then we're down today. So I'm pretty sure I'm back into the 40-something% range right now. I don't know for sure. I haven't measured it, but let's go look at that real quick. Before I click the button, I want to make sure I'm hiding whatever I want to hide. Yeah, okay. Okay, so here's this LT account. It's this morning, it was worth like 64,200. I'm down 1,500 right now, so I'm somewhere just below 6,300. I'm probably, 63,000. I'm probably at 62.8 or something. So it's down, it's out. But here's my first LT that I put on back in February, right? February 8th. This one right now, the whole structure is down $312, including a $575 loss now. So this thing is down. This was up 910 a week ago Tuesday, and now it's down $1,400 since then.
But you don't care.
My profit 10 is right here at 38.75. It's like 50, 60 points below the current deal. And you can see that my put debit spread
is up $100.
is up a little bit. Yeah, it's up $140, maybe a little more. 240, excuse me. Yeah, it's hard to tell. Oh, PL open right here. It's up about $410 right there. And that's offsetting the $700 loss, resulting in a $300 loss. Okay, so that's about right. And this thing will come to life, but it's got 75 days left to it. It's not the most resilient put debit spread. And this, I will pause and say, is a great example of why you need to put these positions on slowly, because these put debit spreads, like there's been a big misconception about how quickly they come to life. They do not spring to life with immediate action. They're intermediate pullback tools, and they do spring to life if they have, not too much long left or they're well in the money. I have in my other account a put debit spread. I'll just give you an example. I don't think I can go to it real quick, but it's on the other page. Let's see. It is, I have a 39.50, 4,000 put debit spread. So it is fully in the money. And right now it is up $670 out of 2,500.
Mhm.
And it's got 28 days to go. So it's fully in and beyond the tent, but it's only giving me 700 and something out of $2,500 of protection. So the time has to crank for that thing to increase. That's an example of it not being super responsive. Probably rambling a little. I don't know if this is where you want me to go or not, but the point is I put this position on and a month later I put this position on. These nakeds are down 1,120. These nakeds are down 6 something. So these are my most recent. Just again, implicitly, these are almost going to be, the newest ones are always going to be the ones blowing up the most.
Mhm.
So if I hit that, if I stayed at the near the end of the day, if I was still above 50 something percent, I would take these two and roll them out. Now these expire at the end of June. I would roll them out usually a week to 2 weeks, 10 days, 14 days. You can bring in a pretty decent amount of premium by rolling out a couple of weeks. And I would just roll these out and down to where I might take them from a 32.75 to a 32.25 or a 30. It'd be something below 32.75. Just trust me on that. Y'all can go check it yourself. I'm not going to do it now and think or swim. It's a pain in the butt. It'd be much easier and tasty.
And Ed,
So-
as we found when I rolled out that
Yeah.
time that I rolled, it actually helps your overall portfolio metrics.
It does. It tames the buying power down. And
Reduces your delta.
so that my number one, and this is my own trial by fire. This is what I learned last, particularly the first half of the year last year, and especially around May of last year into June when the market exploded to the downside.
Yeah.
And techniques I learned from my fellow trader nerds. These weren't techniques. I knew how to roll from Tasty, but rolling these things and anyway. I learned that rolling was a great technique, and I rolled. And sometimes I had to roll like not just this position. I might end up rolling this one. I might end up rolling this one too. But I don't really want to roll too many times. So my thing is, I want to roll once when my buying power gets up into the 50s, and then tamp my buying power back down into the 40s on that roll, most likely. And if my buying power then goes back up into the 50s because the market's continuing to pull away from me or move against me, that's when I want to go in and short an appropriate amount of micros to neutralize the account, or ES, depending, but
whatever.
it's not big enough to ES neutralize. So I would go in with the ES contract. At that point, I have a bunch of theta cranked up from the initial position going against me. I've rolled that theta out to a further DTE to reduce my buying power. My buying power has then become elevated because I'm still kind of being challenged. And at that point, the theta on that account is very chunky. And at that point is when I want to short the future, so that if I start getting the call side sting of the future or futures, if I have to put on more than one, I've got so much theta cranked up in the account, it should at least keep up with the recovery, if there is one. And I say recovery in the market, which is now going to hurt the short future and help my short put premium recover. And that, to me, we are in extreme defense mode. And my main goal at that point is to kind of just stabilize my account and let it recover some. If the market rips back to 4,000 from here, or well, we're only 50 points below, but you know what I mean. If the VIX falls and the market rises some, yada yada, I'm going to lose money on the shorts, the short futures, and make some back. I just want to prevent the account from further damage and allow it to have some upside breathing room of recovery. Whenever we put on a call side hedge, no matter what it is, we are going to lose money on the upside. And by call side hedge, I mean a short future, a long put, anything, a put debit spread, anything that gives us downside protection is a quote call side move that stings us in these portfolios to the upside. So Is this kind of what you wanted me to show?
Yeah, it
again?
is. And that's what I think. I mean, when I looked at your metrics yesterday, I said, well, all Ed did was he ignored his buying. Well, for the most part, you ignored your buying power. You did because you didn't do anything because you were on the verge of doing something, but you ignored your buying power and you ignored your delta. And you said, you know, hey, my delta theta's fine. I'm just going to hang on to here. And I think that's what is probably the correct course of action. Now, I'm not saying that selling the future is not the correct course of action. However, when I did it, it brought up memories of the call, and it brought up memories of me trading futures before and going, hey, wait a minute. I remember these things really sting on the recovery. And I was like, why would I worry so much and micromanage the deltas when my actual naked puts are not being tested?
So, and Bobby, as I've said before, when we're getting challenged like this, we are, and you said it earlier, where you had your little two hands, there's a hand on the left and hand on the right, and we're managing our theta, and in the middle, it's like we're managing our Greeks, whatever your analogy was. When we get cranked up and we're getting challenged like this, the balancing act is you approach the teetering point of your account, maybe really accelerating to the, like you've heard me say a bunch of times, I don't like to throttle my Greeks too high because when the market's down X, I don't want to be down as much as the market is. Right now, this account that I just showed you is down like 2% today and the market's down 1.25. Do I like that? No. But I recognize that I'm dealing with two LT112 positions, one of which is brand new and put on at the beginning of an extreme vol expansion. And the other one's like now a month and a half old. And I have two more positions to put on in that account over the next 2 months before the account even gets cranked up properly. So it's not, although I'm concerned about being down 2% when the market's down 1.25%, I have to keep my head about me and realize, look, you got two 112 positions on. They're cranked up because they're long-term positions and they're new. I have no older long-term positions to help me. I have no older put debit spreads to help me. I have no older short puts that have decayed so much because they've been on for 2 or 3 months. Almost no matter where they are, they're going to be way lower than my newer strikes in value, if you will. But as you crank your account higher, you said, I am more conservative. And for me to let my buying power trend up this high is not a comfortable thing. But again, you mentioned something that is correct. I do look at my buying power. That's the first warning sign of an unhedged portfolio. Usually your buying power is turning red before anything else does. And then when my theta gets up in the upper teens, like 0.1, 0.18, 0.19, and then to 0.2, that is a sign of risk in my account because my buying power is already inflated because I'm not doing any hedges. I don't want to hedge unless I want to freeze my account from further decline, which will minimize my account recovery to some extent, but I still have all that theta that can burn off in a rally and an IV reversal / collapse. So yeah, this is a tested account for me. This is one where I like when it popped above 50, I got very uncomfortable and got in action mode. And fortunately, the market reversed and I didn't have to go into action mode. I'm not going to show my other account, although maybe I will. Let me look at it.
Oh, who cares, Ed? We know you got money.
No.
You ain't. We can tell by the way you talk, Ed. You ain't fooling nobody. Hey, by the way, the Angel's got his hand up. Go ahead, Evan. Beth thought that was funny calling you Angel, Evan.
I wanted to ask some questions about your current portfolios. I like that you removed the futures. I think a lot of us have kind of been saying they're not a good long-term fix.
Yes, short-term only.
Sorry. Yeah, they're not a good long-term fix. They're a good short. But I wanted to make sure I understood the different metrics correctly, and maybe I'm off here, but your 200, we'll say your 200 long deltas would result in a $200 loss for every one SPY dollar we drop, correct?
Yeah, yes, that's correct.
So if SPY goes down $1 and volatility, if SPY goes down 1%, so about $4, and volatility stays the same, that account would be down $800 minus whatever theta, correct?
Mm-hmm.
So I know you were saying that theta is your metric that you're kind of managing everything by at this point. If we drop 1% and your account is down $800, that $800, as we have learned, goes into your extrinsic value.
Mm-hmm.
And that extrinsic value has to decay to 0 by the time everything expires. So what that tells me is your 200 delta gives you very little wiggle room before your theta is going to inflate, and then you're going to make adjustments. So I'm just curious why or how you're comfortable with that 200 positive delta, assuming all of what I just said is correct. Because that's my understanding of how all of this would play out. Is there something I'm missing here?
No, I don't think there's anything that you're missing. Maybe there's some risk that I'm not taking into account, but I think I've just evaluated what it would look like with a 12% down from where we're at, right?
Right, but if we drop 1 or 2% tomorrow, then you're going to have to act quickly to neutralize or roll positions because your theta is going to be too high, which is what you're primarily focused on.
But I don't think that's going to be me doing something where I'm like, oh God, I got to do it. Unless, do you think otherwise, that I would be in a frantic panic to make an adjustment at that point? I don't see it.
I would say maybe not like, maybe, I don't think you'd be in a panic, but based on what we did yesterday, I watched you pull theta out of your account because we all said it's a little high, right?
Yeah, it's a little high, absolutely.
So I don't know. I mean, I'm looking at today and we've dropped 2%. We've been up and down 2% pretty much every day this last week. What are the odds that we drop 2% Monday or 2% Tuesday? I don't know. I feel like your theta is going to balloon really fast.
Well, let's have the discussion. Let's have the discussion. If I were to prune my theta now and assume the loss on a couple of those naked positions, which I don't mind it being a loss on those, have I robbed myself if we do recover? Or if we recover to a point that my theta then gets too low, all I've got to do is replace it. I guess there's a sweet spot to where I go, okay, for the moment, take theta off. If we get below the 0.1, you're more than happy to put additional risk on.
I just feel like we're very positioned
spot?
to the upside, right? So we're basically only winning here if things move up in our favor quickly.
Okay.
We're no longer neutral.
So do you think a more prudent thing to do would be to go ahead and prune or roll in order to get that down, or to simply close positions to go ahead and reduce theta?
So I'm not worried about the theta right now.
Okay.
The theta where it's at right now is, I'm only concerned about the deltas.
You
because
are
if we
concerned
gap
about
down,
the deltas. Okay.
I'm concerned about the delta. The theta right now is fine, but I know if we gap down and that, say, $800 leaves your account and that goes to your extrinsic, your theta is going to shoot up. And if that happens, then you're going to have to pull positions off, or roll them, which is kind of like locking in a loss anyways.
Yeah.
So I feel like we can only win here if we go up. And we've kind of been all over the place the last little bit. So I don't know. The 200 delta is 5 times what your conservative delta is. It just seems really inflated to me currently.
What course of action would you do at this point? So if my deltas are 152 long compared to our metrics and my theta is at 0.26, what plan of action? Because I'm certainly interested in your opinion.
Right.
What course of action would you take?
And that's the hard part, because I know in the past, running just the pure 1-1x campaigns, you would oftentimes have a neutral or even sometimes a slightly negative delta. So I don't know, is it just the pullback and the volatility that gave us such an extreme long delta? I don't know where all of your long delta came from, I guess, is kind of part of the part I'm curious about.
Sure. And in that account, let's see, let me share again. This is a great discussion, by the way. Let's see what we've got going on.
I tend to agree with Evan, but up to a point, because it's entirely possible that volatility could collapse at this point and the market just stays right where it is. So your deltas haven't really changed, but you're going to pick up all that theta because vol collapses. Now, the tightrope walk, if you will, is you have moved considerably lower, and you're closer to some of those naked puts. But Bobby, based on what you were saying earlier, are you really at risk? If you're sitting at say a 30 delta, when the market decides to, you know what, I'm just going to park it right here for like 2 weeks, I'm not going up, I'm not going down of any significant amount, you're going to grab a lot of theta in that. And if you're underneath that that bear trap tent, you know, where this thing really starts picking up close to expiration, that's where you really win big. But the conversation about, well, where does my risk really start biting me? Because Evan's not wrong. You've got an extremely long delta portfolio right now. You benefit tremendously with an up move. That doesn't mean you necessarily lose significantly with a little bit more down move, as long as it doesn't happen too fast.
Right.
And so that's where I'm trying to do the balancing act is, well, how far should I let this go before I make some kind of adjustment? Even if it bites me a little bit on the upside, I just don't want it biting me more to the downside.
And I think that's great observation. And that's what I mean by the more tested we get, the finer the point of balancing we have to balance on. And at some point you have to use the hedge. And that's why I've been like kind of don't hedge before you need to, and don't hedge just to be able to put more risk on, because in this situation, it's going to make the hedging that a person needs to do. I don't mean you, Bobby. I mean anyone. I think it's going to make the hedging, from my perspective, more challenging, because you're already using the hedges to crank up the risk in your account. Now you have to use the hedges to protect all of the risk in the account, which in my mind has got to be more difficult than, quote, just protecting, unquote, an unhedged account, which is difficult enough. So it could be my own experience level, or I don't know what. I'm not saying there's not a better way or someone doesn't have a better technique at all. But I do think the more we get tested, the more downside risk. In other words, we're at a point now, or like say Wednesday morning, when you were really at the IV spike high where it was like up around 30 on the VIX. We're at a point then where like, oh, if you have buying power, put it on. Yeah, put it on. But realize if the VIX then goes to 40, your whole account's blowing. And I'm not saying not to put on risk if you have the buying power, because you're supposed to. And it's kind of a great time to do it. Usually it pays off phenomenally well. But what I'm saying is, at some point when we're looking at our accounts, and I have 3 of them, so I kind of look at them differently. And each one has like a tipping point where I cry uncle. Like at that uncle point, I'm going to be short in the future to neutralize that delta. And I'm just going to take whatever consequence there is. If the market rips to the upside and I lose a boatload on the futures, at least I'm making a boatload on the short puts, which should somewhat overwhelm the losses I'm experiencing. And hopefully I'll be nimble enough to take the puts up, the short futures off accordingly, and keep that razor thin balance working for me and not against me as much as possible.
And I know we want something
I don't want
to
to say there's a point of fear, but there's a point where like you ask often, Bobby, am I comfortable? Well, and usually you say yes, but if we're asking ourselves, are we comfortable? And all of a sudden the answer becomes, no, I'm not comfortable anymore. You have to spring into action. And at that point, when you say to yourself, I'm not comfortable anymore, you have to almost be willing to do whatever it takes to make your individual self comfortable with that account. I'm not saying rush in and do a bunch of things. It might be one adjustment. You might take off one short put, or you might add one short future. It doesn't have to be a lot of activity, but it's got to be an activity and a mindset change where you go from, I want to sell theta to make premium, to I want to protect my account from any further damage because I don't want any more damage to the downside. You see, that there's a tipping point where we have to change mentalities, and it doesn't mean, again, drastic action. It just means an attitude change where you kind of go in hunker down protection mode and until the fire goes down a little, and then readjust. And remember, all these contracts are 1256 contracts. And y'all all heard me say this. We all have to continually reinforce in our own heads when portfolio adjustments are needed. We really should not give a damn if we're taking a winner or a loser off the table. Yes, take the winners off first because they're the easiest to take off. Then you get to the hard part. But when you get to the hard part, remember your net lick right now is your net lick right now. It doesn't really care if your position's up or down. Your campaign doesn't care. You've got to do what you have to do to protect the whole campaign at that point. Again, these are just my perspectives and my mindset about it. If y'all are shaking your head no, that you don't agree, I mean, like, this is an individual thing for everyone. And everyone kind of has to find their comfort zone. And everyone has to take these last 2 weeks and put them in long-term memory, because these are the challenges that we faced last year in these violent pullbacks, huge volatility explosions, usually along with bigger price downside movement. At 39.50 on ESM right now, or at 39.44, we're really not down that much. Volatility is through the roof. We need volatility to come down for us. And again, the VIX is only at 25.5. It could easily go to 35.5 on further chaos next week if there's some coming. So you see what I'm saying? We're in an elevated state. I just think there are different mindsets that have to come into play at different cycles in the campaign, where we go from offense to more defense, I guess, Bobby, to use that analogy that you've used before.
Mm-hmm. Let's see what happens if I take 2 of these off. I mean, let's just see. Let's do it for the sake of science. And then we may even look at rolling out just to see what happens. Okay, so we got filled at 57.75. We take off 37. This was my closest one to being tested. So we took off the 37.50s for 57.75. And what I can record that later, but let's see what it does for our grades, right? So 178.75, 178.75. It's just a small adjustment, 178.75, but it looks big, doesn't it? Actually, if we go, okay, we went there from 206 to 178.75, and that took our buying power from 19,342 down to 16,696. 16,696. So we went down from 59% to 51%. Maybe it's something as simple as saying, look, I need to start paring down if I get above X% of buying power, because look, on the other 2 accounts, I don't have that same issue, right? I'm at 41%, right? 41%, 69 too long, which is not that bad, and 0.21. We look on the Tasty account, same thing. We're at about 42%. We could be at 35.23, and we're just 35 long. Maybe it is something along those lines. What do you guys think about that? Where I just said, okay, what we did is getting our buying power back to about 50%, and now is that going to hurt me on the way up because I took some of my extrinsic value out? Well, maybe, Should I have rolled that out to see what the difference is? I don't know. I don't think so. I don't think when you're this high, I don't think you're wanting to replace that theta. So maybe it's the case that, okay, what we did is we took our buying power down from 59% and we went to 51%. Good job, Bobby. Do it one more time. Kind of get that. And that kind of sounds like what you were doing, right? When you got above the 50%, you were kind of like, you could take something off to get it a little lower. And then we could do the same thing. We could go
Yeah,
back up.
and look, Evan has his hand up. I don't want to take.
Oh,
long
go
on
ahead,
it.
Evan. Go
I'm
ahead.
gonna hand
Yeah.
up the football to him, but Bobby, let me just mention this real quick.
Yeah.
If I'm rolling two, here's another management technique. If you're doing 1-1-2s and your buying power is really stretched and you're starting to feel the squeeze, you can roll those two out and down, out in time and down in price a little, and then take off one of them and put one back on. So if you're rolling, say, 60 points of two naked puts that have 60 points combined total, you can roll them out in time into one contract with 60 points. And you can also lower your buying power by doing that. Now it's raising the level of that one contract. And you're like, well, why do I want to move the price lower, closer? Well, because you now have one notional contract of risk instead of two. And if the market simply stabilizes, you'll burn that theta probably quicker because it's a higher strike. And if the market continues to blow against you, you can roll that one back out into two and a further out expiration again. Now, I know this sounds like some tail chasing, but we are chasing our tail to the best of our abilities at that point. So there's all kind of, so if you're rolling and you're really challenged on buying power, you can roll two into one, if that makes sense. If you've got a bunch of cheapy nakeds that you've been toying with and they're down in the 6, 7, 8 range and they've blown up to 11, you might want to take 3 of those off for 33 points and go short one naked for 33 points, taking 3 contracts of risk and turning it into one. Again, it's a higher strike. It's got its own risk parameter and dynamic, but it is a legit technique that I've used more than once. And I used it earlier in the week in my other account where I had 1-1-1-2 and my buying power did shoot up. And I did close the 2 short puts and rolled it out and up into one higher put for the same amount of money. And now I have a 1-1-1. It's not a traditional one because the one naked is much higher than I would put on initially. But I also know ultimately what I have in that account is 1 ES 1-1-1. And even though it's cranked up, it's at about 80 something points right now. I don't have it right in front of me. Ultimately, Bobby, I know what is our ultimate defense in my mind? It is size. So ultimately, I have one now in the money put debit spread that's going to, I know, make at least $1,800 more for me if the market stays down here. So that's $1,800 that'll come back to me in the next month or so if we stay down here. And then if we just stay here, that naked's also going to be losing some value. And at some point, if absolute worst comes to worst, I'm going to end up owning that contract. Like I'll just get assigned that one contract and I'll start selling calls against it. That's my management technique for this other account because I feel comfortable with that management technique. On the other hand, in my big account where I'm mostly short SPY puts for most of my theta and I'm running some 1-1-1, I have a 1 LT, 1-1-2. I've got a couple of stretched 1-1-1s for a little bit of credit that are both theta producing and protective over the longer run of the campaign. I'm in there. If I end up getting put a whole bunch of SPY, I'm going to own my account value worth of SPY if we decline down to like the 350 level on SPY at this point. That's about my average. I usually put those on and they're 12% below the market. So size, I'm comfortable with. I'm comfortable with it going down that much and me chewing on a boatload of SPY at that point and just selling calls against it. Yeah, if we go to 3,000 and SPY's at 300, I'm down 50 points on 1,200 shares of SPY. I'm down $60,000. It's real money, but I'm in SPY, you know, it'll come back. I'll start writing way out of the money calls against it and managing it like I'm sure every one of us have done based on that story. And as far as the 1-1X exposure in that account, I'll manage it similar to what I'm talking about here. It's relatively low given the account size because I only need an added little sprinkle of theta on top of what I'm doing which is the SPY puts short, an account loaded up with T-bills and a few 1-1X on top of it. And so if I got to start defending anything, it's defending those 1-1Xs, which are not super plentiful in that account. So that account is relatively low risk. If I showed it to my neighbor, they'd probably want to put me in the insane asylum, but in our world, it's relatively low risk. The account I just showed is like a medium higher risk account for me because I allow the metrics to throttle higher because the account structure, like the LT thing, is a 4-month campaign before you get fully cranked, or at least 90 days. It's actually 4 months. So it has to have some breathing room to roll out. But as I've mentioned to quite a few people when I've shared that spreadsheet, and I've shared it with quite a few people before now, it's one of the reasons I didn't mind sharing it with everyone else. If my metrics look like they do now, 3 weeks from now, when it's time to put the third position on, it's not going to get put on. I'm going to hit the stopwatch button and pause, and my metrics are going to have to crank down before I can put a position on. I will never put a position on if my metrics say you're even remotely elevated. It's not worth the risk. And as I wrote in my room, like, I'm in this for the long game. I'm not in this to make the max profit next week or next month. I'm in this thing for the long run. So in times of turbulence, I'd rather be in, let me just absorb what I can and then go into ultimate protection mode or accept assignment or whatever. I do have some idea of how each account would be handled in a blow up. So, and that account I showed would actually require more attention than my big account, even though my big account is, 6 or 7 times bigger than that one. Mm-hmm. So the smaller account kind of has more risk in my mind. And so, and if I had 3 LTs or even 4, and I was experiencing this, I'd already be in major defense mode, just by definition of the account size and the position load. All right, I'm going to stop. I'm sorry. Evan, please.
Yeah, go ahead, Evan.
So we know 3 things. One, after the T&D campaign, our metrics matter, which is part of the reason why I looked at yours and went, maybe there's something we have to look at here. We also know that we can't survive a 20 or a 12 to 20% drop. We can't survive it if we aren't hedged and we're not going to do anything with futures, right? We know we have to act at some point. And then we also know that the VIX is a mean reverting product. So with all of that said, I think stage 1 really is managing our metrics, because we know that if we don't manage them, we don't survive. So
true.
Maybe that means we have to take all of our winning positions off and some of our losing positions off, and we have to realize a loss there. That will give us a chance at surviving on the way down. We also know that eventually volatility will contract, things will be okay. And once we get to that point and things start to come down a little bit, you can throw on more positions. Maybe you need VIX to come down to 21 before you can put on more positions as per your buying power. Even at 21, we've seen VIX drop down into the low teens before, the mid teens. So it's not that 21 is going to be the low point. It might be 18, it might be 17. Either way, we can still take advantage of the volatility and put on positions when our buying power allows us to. But
right,
I
and just pare it down when things are, in turmoil, and we're still preserving my theta percentage. I think, we're not taking away a lot. How do you now feel about I think after you brought up your points, I closed 3 naked puts, which looks like I'm in a much better position now, right? I took my buying power from 60% down to 48%. I went from 206 in my deltas to 166, and only dropped $18 in my daily theta.
Yeah, I personally would look at that, and I mean, that your average rate of return that you're happy with happens when you're at 10% theta, right? Or 0.10. So even looking at that, you're still at 0.22. You could probably take some more risk off the table if you have winning positions, and I think you'd be just fine.
And there's no winning positions at this time, but I don't think it really matters. Yeah, and I don't think it matters if it's a winner or a loser. Like Ed said, I don't think that's really, just take something off.
Easier to take off.
It is psychologically, emotionally, easier to take off a winner than a loser. Absolutely it is. So what I did is I took off the 3 puts that were closest to being tested. So I took off the 3 puts with the highest delta.
Yep.
Yeah. And what I could do, what we could do is it's never bothered me ever to buy some protection. Remember how many times do I say, hey, let's borrow a little bit from our theta and let's buy protection. That's always been something that I'd love to do. So let's see what that does. We'll go in, we'll trade the E-minis like we normally do and just buy a little bit of protection. We're borrowing from our theta to buy just a little bit of protection. And that normally gets us a good bit of help for a very small investment. So the closest I could go for 30 cents is here. We could buy 2 puts, 30 cents a piece. And let's see what this looks like after we do it. That should fill. There we go. And this looks like, now let's look at our metrics. What's scaring me is I'm going to come out with a portfolio that looks like Ed. I'm going to go at 0.2 theta. So now I'm at 163.69. No, 163 minus 1.5. So 162.60. Okay, 162.60. Oh wow, look at that. That dropped theta by 10. Yeah, look at there. Now I'm at 1.18, and that took the buying power down from 15.725 to 15.020. I got to add this back into it. So that's about what, 14.7, 14.8. So what that looks like, 14.7, 14.8. There. 45%. And that brought the deltas down a little bit more. Yeah, I'm comfortable with that. Really comfortable with that. Cool. All right, any other comments or questions by anybody? I thought we were going to do a Muscadine Mafia session, but really we covered the Muscadine Mafia session in this long extended session of everybody together. So I don't think we'll actually have a separate Muscadine Mafia session. I think everybody just participated in the Muscadine Mafia session. So let's
I'm all good with that.
yeah, okay, good. Ed, you feel good about my portfolio now?
I mean, ultimately, everyone's got to be comfortable with their own portfolio. Yeah, you look a lot better balanced.
Yeah.
It's hard for me to say anything because, like, if we get a big rip rally market, on Monday, Tuesday, and Wednesday, yeah, everyone's going to be like, "Why did I listen to that old Ed? He told me to."
No, I mean,
You know.
I need to make decisions and you need to make decisions like there's a 50-50 chance.
And that's well put, because that's exactly what I'm saying. As we sit here minutes before the close, about to head into the weekend and in the midst of the turmoil that we're currently in,
We don't know.
no one really knows what's going to happen next week or what the market reaction is going to be. So, it's a time of you better be paying attention or check in a little more often, not you, but everyone, which honestly include you too, Bob. Check in and see what the market is doing. If you're running around at work or doing, it's like, check in and just make sure something horrible is not going on or something great's going on. You might want to make an adjustment then. So, keep a little more in tune over the next week, at least through, dare I say, the FOMC meeting next Wednesday, which is probably going to be a trigger point in one direction. We're probably going to have volatility up until that time. So, learn from this, realize this will happen 1 to 3 times a year, probably, where we have a violent reversal. And without this sounding ridiculous, when we come out of this, you're going to look back on it and feel so happy and energized from it. If you came out okay, if you didn't over lever and you haven't scorched yourself too much and you haven't lost your taste for the whole thing, but you've kind of managed to do the right things and get through the turbulence, and now your account is recovering, even if you're down. If we're 3 weeks from now and you're down where you were from 2 weeks ago, but you're kind of like okay-ish, you're gonna no matter what, win, lose, or draw, whether you keep doing this or not, this is where you learn. You do not learn putting positions on in that market. This is where you learn. Putting positions on in a flatter up market and waiting for them to decay is the easy part of the ledger. The hard part is this. And this does happen periodically. So learn from it, experience it, let it speak to you. If it's too much, then you either don't want to do this or you want to do it in a much smaller quantity than you thought you did going in.
And this isn't our first time, y'all. We've been through this. Hey, we've
No,
already
it's about
done
my
this, but
seventh. This is about my seventh downturn like this. And
Yeah.
this one's violent. This one again ranks among the most violent that I saw last year. So and my larger account that I didn't show, the medium one that I showed is half cranked. And look at my metrics on it. You know, it's cranked up metrics wise, but I only have a half load in that account. In the bigger account, I was just finished selling my SPY puts last week as the market was, I think I put my last ones on, I think it was Thursday when I put my last two on. And that account is now full of SPY puts. I have to wait and either get assigned or wait for those SPY puts to go down 90%, etc. And in the meantime, I'm putting on what I call a stretch 111, which is a 111 stretch for very little credit. And I'll take the naked put off at 90% and leave myself a paid for put debit spread on. And I'm throwing those into the account every 2 or so weeks right now, 1 ES 112. And that it's a little bit of theta capture, and it's also designed to throw off the put debit spreads to hedge the short SPY puts, which have no hedge on them at all. And then on top of that, like I said, I have an LT 112. I may or may not continue that. I may do 4 stretch 111s a month for a little more credit and forget about the LT. Everything's subject to change, but I'm sorry, I kind of lost my thought there, but we all have to size things appropriately. And again, coming through this, assuming we stabilize and things don't get too much more haywire, these are very rewarding experiences when they're over with and you can look back on them and you can look at your metrics in your spreadsheet and you can look objectively at what happened. Like, look what happened when the market blew up. Look what happened when the VIX went from this to this. And you can use that in the future. When the VIX starts exploding in the future, you can look back on your records and think to the past and say, well, I have an idea of what could happen. Is my portfolio in a position to tolerate that? And if you say, yes, I'm comfortable, great. If you say, no, maybe I'm not. Maybe I want to take a position off and wait a week and see what happens. Remember, we're playing the long game. Unless you're playing the short game, in which case, play the short game. I'm in this thing for the long game. I want to figure out what I can do week in and week out, month in, month out, year in, year out, and produce a reasonable return and hopefully steady return. And that's where I'm going. And as you said, Bobby, I think 0.1 theta, 0.1 to 0.5, it produces about a 1 to 1.5% monthly return. So as I've been screaming for weeks now, I'm getting a little tired, but I'm still screaming. Everyone should start low. Build your account slowly. Watch your metrics when they're low in a pullback and watch how much they blow up. Learn that way and make a little less money at the beginning so you don't lose so much down the road when you understand the thing a little bit better. I'm signing off verbally for the day. Everyone have a great weekend.
Good stuff, y'all. Y'all have a great weekend. The only thing that I'm doing now is I'm trying to pull up my 2022 spreadsheet. Now, for some reason, I believe that for some reason I was cleaning this spreadsheet up to get ready to produce the next year's Sweet Bobby spreadsheet. And I think that I deleted my Greeks. I hope that's not the case. But if y'all will want to hang around a second, then we will look and see what I did. Let's see what my Greeks and ratios. Did I delete that? I hope I didn't. Okay, I don't think I did. Okay, hold on. Wouldn't it be interesting to see where I went up to 90-something% and what the metrics were? Let's see what it does. Hold on, I think I got it here. Let me share my screen. Y'all want to hang around? As my kids argue and fuss in the background. All right, here we go. That red here, boy. So let's see, buying power used. Here we go. Because I remember getting up to the 90-something%. Let's see. So here we were at 30%, 50%. That didn't bother me. Now we did have negative deltas there. Why did we have negative deltas? There were no futures. We were not doing any futures at that time. Okay, let's go down. See what we got. 50, 80, everything looks good. 35, 30, 30, 30, 30, 30, 30, 30, 20s, 20s. I know I went up to 90 somewhere. Y'all help me find it. 40s, 50s. No, was it in the IRA maybe? I know.
I think it was on, row 50, Bobby.
Oh, row 50, you saw it? Okay, good. Let's go back. I don't know how Rick sees things. There it is, 94%. Now, interestingly enough, my theta, y'all, was 0.75. Rough. Wow. I was at 95% buying power, but my deltas were not out of kilter, really. That is amazing. I'm just trying to remember what happened. Let's say June 16th. Let's go back to trades. Let's see. Maybe we were doing the full 111 then. Let's see where we had June 16th. Yeah, we were doing June 16th. So we did take off some bull 111s. That was what? Short puts, long calls. But it didn't look like we were making any moves there. Look at that. We took off something there for a little bit of a loss. Hold on. Just look and see if there were any losing trades in that time. No. I mean, we weren't taking off positions at that time. Let's go over to the trade tab and see what may have happened around that same time. See if we have something over here that was going on. Had we split stuff up at that time? No, yeah, we didn't start doing these things separately until August. So we didn't have any trades around the 15th or 16th. Let's go back. Trades on tab. Surely I wasn't putting on trades at that time. Let's say I entered in 16. Wait a minute. You mean to tell me I entered a trade on 6/15? Entered on 6/15. I put a 112.31 on with 90-something% buying power. God, Bobby, what were you? Let's go back to our thing here. Is that right? 65.80. We were at, my theta had swollen to 187.75, 94% buying power. And what happened? 17th, it went down, it went down, it went down, went down a little bit, went down a little bit, went down a little bit. And the next thing you know, we're back in green at 32 days, only after what, 2 weeks? So we had to sit through that for 2 weeks. And let's go back to the trade tab to see if we were putting on anything. Surely not after the 15th. Surely after the 15th. 15th. Okay. Yeah. Okay, so Bobby did put a trade on that day, but I held off for 13 days. Check that out. Now that's cool. Now, let's see if we exited anything during that time. This is where we would see here, right? So that's 7/1. What was the date, Rick? 6/15. We're closing things at 6/13 and 6/14 for wins. That was a bear 112. Well, no wonder that worked. 610, 613. We had some winning trades. We closed them. Yeah, but there's nothing else that we were closing. We were not doing futures then. We had not added any futures to the mix. I just sat through it. Again, the buying power was much worse. The deltas were not that bad. Now, I have a feeling that is because, look at this, deltas -9, +9, 12, -12. We got a big move down that day, apparently, for that to go up and for our theta to explode from 122 to 187. But we were carrying, 0.28, 0.26, 0.23, 0.3, 0.5, look at this. And we were clearly in the 60s. I don't know, man. Anybody got any takeaways from this? I did not overmanage it at all.
It looks like your net lick was moving around a lot less here than it
Mhm.
was these last couple weeks, which I think is probably influencing some decisions as well. I think the worst, it looks like it dropped by about 3%.
And we can't trust this VIX figure either, y'all. That's the problem. We'd have to
Yep.
see what VIX was, because remember, it was until later I added it. So I basically went back and just put VIX at 22 here. But still, the number being at 0.75 that day is definitely correct. Yeah, now, wow, what would you attribute the net lick moving around a lot less to, Evan? Let's think about that. They were probably more established positions. Interesting. Let's see where we were putting them on, y'all. Let's see what we were doing here. We were doing around that time. We were doing the full 111s all this time, right? And we were doing 112s. And how many days out? Yeah, we were still at 60 days out. 60, we were closest to 60 without going over, it looks like. That's what we were doing. Yeah, 60 looks like the max that we were going at. I don't know, y'all. That's really interesting. I mean, I could, spend the entire weekend probably dissecting and looking at VIX on particular days and what happened on particular days. It's just interesting to see how it worked and how I was not overly making adjustments, though. But our deltas were pretty good. It's just that we were crazy on buying power. Look at that. I mean, 90-something%, and we just apparently just came out of it by just waiting. Interesting. Let's see, what are y'all chatting about? Yeah, 94% on 616. Okay. Anything else? All right, great session, y'all. This is a great mastermind, and I hope y'all have a great weekend. Happy St. Patty's Day to you, and I will see y'all Monday.